All right, let's do it.
All right, we are locked and loaded. We are live. Now we will see the results. Make sure we're good. Come on in the room. Welcome back to Building for Generations. I'm just making sure you guys can see my video okay. Tony, can you see my PowerPoint from your side okay?
I can see it.
Perfect. Welcome back to Building for Generations, guys. Today is December the 22nd, 2021. It's only a couple more days out of the year. So we are having our annual Limitless week, and we are giving without expectation. I wanted you guys to meet somebody that's been definitely valuable to my life and what I've been doing, and my family. Really, really valuable, getting us to the next level as far as real estate and investing in real estate. So Tony, how do you say your last name? I forget.
Predey. Tony Predey.
Predey. Tony Predey is here, and it's Wednesday. We're going to talk about the FHA loan and financing. And I think it's one of the easiest ways to get into real estate investing. And I kind of want to share with you guys, my circle, what he shared with me. We've been on the phone several times talking about, okay, what if I move, here and move there? How does this work? And Tony is very informative, and he definitely can give you guys better insight with the FHA loan and owner-occupant financing. So we're going to go ahead and get started. Take a look at our week. We have Monday, which is 3,000, Limitless, aligned souls. So if you're a tenacious badass, you are in the right place. Tuesday, we're going to talk about business operations, how to keep best practices in your organization and not commingle funds, personal and business, and keeping those separate. And then today, we're going to talk about the FHA loan and how to secure financing for that. Thursday, we're going to do a little rendition of the real estate professional status, how to qualify for that. And then Friday, the power of a tax plan. We're going to get into that. So painting the picture is essential to creating the life you want, need, and desire. So let's go ahead and get into it. Tony, thank you for coming on. I'm so excited to have you here and share some knowledge with my circle. I know you're very valuable to the real estate game. And we came across you on a podcast we were listening to, and Tony has been excellent so far. He leads by service, and he loves to service people. He's a servant leader, I would say. So I really resonate with what he's doing. So Tony, you there?
I'm here. Thanks for having me on, man.
So if you want to get a little brief introduction about who you are, kind of what you're about.
Yep. My name is Tony Predey. I am a mortgage lender with A&M Mortgage Group. Company's out of Northwest Indiana, but live in the Chicagoland area, primarily do my business there, but I help people throughout the entire state of Illinois, Indiana, and Florida. Personally helped Ellis and Tracy purchase their first property. And really, the way I look at it is, buying a house is a complicated process, right? It's not as simple as just going online, putting some information in, and then getting a loan. It's not like buying a pair of jeans, right? There's a process to it. There is a complicated approval process, and just starting out, figuring out, okay, how do I even get into this, and what are my goals? What do I want to accomplish? And so I like to really formulate a personal experience and a personal loan process for everyone I work with. And I know Ellis, when you guys' situation, we've been working. We worked on it for a couple of months, actually. It was, it was a work in progress.
Yeah, man. It was a while we were holding on to. We just like, man, we'll take anything at this point. Not really, but
right. I know what you mean.
We landed on something that was great. So you definitely helped us out with that process. But go ahead. Sorry. Go ahead.
No, you're good. You're good. So yeah, that's pretty much the kind of the mentality I bring to everyone. Just making sure they have the time to move at the process, the pace they need, and really making sure that however we put the deal together is really in their best interests.
Exactly. So this is going to be a conversational style type of interview I already got some basic things up here for you guys to look at and for us to kind of discuss. So firstly, I would say, what areas do you service? It's on the screen for you guys to see, but Tony, you can talk a little bit about that.
Yep. So, like I said, I live in the Chicagoland area. So, a majority of my business is obviously there, Chicago suburbs, but that doesn't stop me from helping people in the city. I've done loans down in the Illinois side of St. Louis, all the way out to Fort Wayne, Indiana, and even in Florida. So, I'm licensed in the entire states of Illinois, Indiana, and Florida. And like I said, just because I live in Chicago doesn't mean you can't do it remote, accomplish what we need. So, if you live there, Illinois, Indiana, Florida, give me a call. My number's on the screen. We'll be able to help you out and do what you need to get into a house.
Yeah, and this guy's fantastic. Like seriously, he goes to work for you. So definitely use him. So let's just start with the pre-approval process. I think this is the basic requirements for the pre-approval process, and just gaining an understanding. Like, where do I need to go shopping? Like everybody wants to go shopping, for a house, and they go to a real estate agent. And the real estate agent is looking at them like, you don't got a pre-approval. You're kind of wasting my time, So talk to us a little bit about the importance of a pre-approval and just kind of the basic requirements of the pre-approval.
Absolutely. So it is really the most important part of your home buying process. If you can't qualify for the loan to buy the property, unless you have the cash to do it, going to see houses, you're honestly just wasting your time, the realtor's time, and no one's happy at the end of the day. So the very first part of the process, give me a call, we'll get you pre-approved. Now, during that call, what we're going to do is I'm going to start with just asking you a couple questions so that I understand your situation and what you're trying to do. Then I'll go into getting some information from you. That'll be name, birthday, address, social, what you do for work, how much you have saved, and a couple other miscellaneous questions. From there, we'll run everything, crunch some numbers, see what things look like. If you need to work on something, we can do that, right? Maybe it means paying off a credit card, maybe it's building credit, whatever it is, everyone's different, right? And odds are if you're, in a position where you're thinking, oh, I don't want to talk to a lender because I don't want to, I'm embarrassed or something. I've seen it all, right? As soon as you think you have a messed up situation, I have 10 other people with far more messed up situations, right? So it's totally normal, right? And but in all seriousness, on this call, we're really going to start building the groundwork, the framework for your home buying experience. And so after that, assuming everything goes smoothly, you have a pre-approval amount. And depending on where you're buying, like Indiana, for example, it's a lot more straightforward because the property taxes are a lot more uniform. But that being said, usually it's a range, right? Depending on the taxes, anywhere from 300 to 330, or from 100 to 125, right? Whatever you're trying to do. We'll then know what loan program are we going to go with. Are we going to do FHA? Are we going to do conventional VA if you're a military veteran? We are going to accomplish all this on that pre-approval stage. And what it's going to do, it's going to open your eyes to what types of property, how expensive of a property could you buy, and really it'll give you an idea of what you got moving forward.
Exactly. Get ready to go shopping is what it just rings in my head, And Tracy, she had a car that we had to, or something, just some type of debt that we had to go ahead and get paid off and stuff before we went ahead with our process. So Tony definitely spends time with you and make sure you're ready to go, and make sure, he walks you step by step, and he kind of keeps a tag on you, and that's what I really like, the personal touch that Tony has with you. Some people will just kind of take your stuff and be like, oh, you're not ready, come back when you're ready. Tony kind of is there for you,
And that's the thing. Not all pre-approvals are created equal, right? You go to, Rocket Mortgage, for example. You see their commercials everywhere. Quite frankly, you're paying for their marketing budget if you go with them, but that's neither here nor there. But my point is, you talk to someone like that, they may not be as experienced. They may not just be as passionate. And so they're not every loan officer is capable of really kind of molding what you need to do in order to get into a home. Whether it's knowledge, like I said, or passion, it's just not every loan officer, not every lender is the same. And it's really important you find someone who will take the time to really, kind of start that approval process for you. And I can't emphasize the word process enough. It's not like it's, boom, one and done, you're ready to go. Things change, it is a process, and it's just important to go with someone who sees it like that.
Yep. And who knows what's going on. So let's talk a little bit about credit score. What for an FHA loan, like what are we looking at? I think around like you're the expert, but like 580 is what I've seen.
Yep.
You want to be above 580 for the credit score. Something that surprised me when we were kind of going through the process with you, Tony, is the cash reserves, right?
Mm-hmm.
I didn't know what the hell I know what a cash reserve is, but I didn't know, that was, a requirement for, a home or anything or mortgage. Let's kind of talk about a little bit about the cash reserves and how that kind of relates to the down payment too, as well. If you can tie those two.
Absolutely. So we'll start with credit score. So FHA, generally the minimum required credit score is 580. Usually you'd like to see it above 600 just so that you have a little bit more fair pricing to save you a few bucks. And usually when you're in that 580 to 600 range, there's usually something we can do in the short term to get you above that 600. That being said, really the main credit point for an FHA loan is usually when your credit score is below 680, it normally makes sense to go with an FHA loan over, say, a conventional. I know this call is primarily for FHA loans, but that being said, we can do another one, talk about conventional, but your FHA deals are going to be more uniform in your mortgage insurance premiums. They won't be as penalizing to maybe a lower credit score. And therefore, you find on single family homes in particular, when you're in that 680 and below, maybe even 700 and below, it might make more sense to do an FHA loan. Now, that being said, that's why it's important to do that pre-approval call, because once we look at the numbers, we'll determine which is the best loan program for you. And if it is FHA, this video is really going to, be important for you to listen to. Now, the reserve requirements on an FHA loan, when reserves are always required, is on multifamily properties. So this will be 3 to 4 units. Any residential loan, you can get a residential loan on anywhere from 1 to 4 units. So these 3 to 4 units, and this is really where the FHA loan separates itself from the conventional loan, is on multifamily, because you can get into a multifamily property with as little as 3.5% down. Whereas on a conventional 2 unit, you need 15%. On a 3 unit, you need either 20 to 25%, or a 4 unit primary residence, 25% down. And so this is where the FHA loan is key. Now, reserve requirements, you're going to need 3 months reserves. What this is let's say for closing, you need 15 grand, right? Between your closing costs and your down payment. If your mortgage payment every month is 2 grand, well, then you need to have 6 grand in reserves after you close. So going into it, you need to have at least $21,000, right? We're getting at 21K total assets, less the down payment and closing costs of 15 grand. That leaves you 6 grand, which is exactly 3 times your monthly payment of 2 grand. So that reserve requirement is important to keep in mind when doing an FHA loan, trying to buy a multifamily property. Whether that comes from a gift or your own funds, you do need to have that reserve requirement.
Exactly. And that way you broke it down, I hope to be smart one day to break that down to somebody.
Right.
That's awesome. That is really awesome. So let's move into, I think another important part is the work history requirement. I think FHA requires you to have a 2-year trailing work history. And it doesn't have to be the same job, right? It just has to be
correct. That's a big misconception. The amount of times you get someone calling you, oh, I just changed my job. Is that going to be detrimental? Is it going to be fatal? And it won't, right? So what we want to look for in the approval process is to make sure you have some consistency in your work, right? Because think about it, as a lender, we need to be able to project how much you're going to make moving forward. Well, if you've had 12 jobs in the last year, how are we going to do that, right? We don't know. You might have a different job next week. Whereas generally they're going to look for no more than 3 jobs in a 2-year period. Sometimes there's exceptions, right? Same line of work, maybe you're getting a promotion somewhere else. There is a lot of subjectivity to it, but at the same time, you will want to make sure that you can document 2 years of work history going into purchasing your home. Now, there are some exceptions. For example, if you maybe were off for a year, maybe the COVID layoff, or maybe you were injured, whatever that might be, Well, if we can document 2 years of work history prior to that gap, and then once you've been back to work, we can document 6 months of consecutive work. Well, you may be able to get around that 2-year work history. And so that is something that not everyone knows about. A little trick to the trade you're learning here. But that being said, again, it's very important to get that pre-approval process started as soon as possible, because what that's going to do is it'll allow us to know where you're at with your situation and what exactly, what guidelines will apply to it. But generally speaking, yes, you will want to have 2 years of consecutive work history. And also a big one too is full-time work, right? If you just switch to part-time on an FHA loan, you're going to need to have 2 years of part-time work, whether that's in addition to a primary job or just a part-time job in general. And again, that has to do with how can we predict your income moving forward. Part-time work's typically variable. It's not as secure. And so we want to make sure you have a history of that.
Exactly. That is awesome. That is great overview of the pre-approval process. Anything else that you kind of want to hit on for the pre-approval process? Then we're going to move on to the underwriting process, which is, I think, man, it blew me away how they do this, and I'm still learning how to master this. And I'm pretty sure when I get into syndications and all that stuff, when I get into my 40s and 50s, I'll know more about the underwriting process in real estate in general. But Tony, let's talk about the underwriting process a little bit. So after you go through, you get a pre-approval, right? You go shopping, you find your dream house, you put in an offer, right, with your realtor. The offer is accepted at that point. What happens after the offer is accepted? There's an underwriting process, right?
Absolutely. So what kind of, underwriting is a little bit, maybe 2 steps, 3 steps into it. But that being said, we'll just take it from the top. So let's say you're pre-approved, you're out shopping for houses, you put a bid on a place and your offer is accepted. Number one, congratulations. In the past, year and a half, not that easy getting an offer accepted on a property. But that being said, let's say you have your offer accepted. So then you're actually going to do your formal mortgage application, right? We have all your information in the system. Now we have a contract. We're locking your rate in. We're going over, what is the best rate lock option for you. And then once we're under contract, you're going to sign your docs. And now we're getting into the processing stage. During this point, you're probably going to have a home inspection. Now, it's not required. And it's up to you, right? If you're a handy person, you might as well just go check the house yourself. But that being said, most people get a home inspection. During this time, you'll see, is the house, structurally sound or is it not? That being said, let's say everything checks out there. Now we're in processing. My personal processor, Christina, she's absolutely fantastic. Shout out, Christina, if you're watching. But she'll be reaching out to you a lot during this stage. But that being said, we're going to be getting some more documentation from you. We're going to be getting verifications order, right? Verification of employment, verification of assets. We're getting our title work back from the title company here. And just a couple other things that are going to, kind of think of it as kind of security measures, right? Making sure that all the information you gave us checks out.
Yep.
We're also going to order an appraisal. An appraisal on the property is where a third party goes out to the property. They inspect the property lightly. They take pictures, they get dimensions, and then they generate a report using comparable data of likes properties that have sold within a mile radius in the past 3 to 6 months. And they're going to take that information and give their assumption of the value of the property. Now, this is always a huge part of the transaction because as a bank, we're only going to lend on the lesser of the sales price and the appraised value. And especially in the last year, what people have been seeing is appraisals coming in low, right? This is an industry phenomenon. That being said, I've run into it just a few times, but what we're going to be doing here is really making sure that that property is worth what you're buying for. Odds are you wouldn't go buy a $100, anything for $150, and that's what we're trying to prevent you from doing. Let's say everything checks out. Now you're getting into the underwriting stage. This is where you see people that are, oh, I'm nervous for underwriting and whatnot. For starters, I'll tell you, if you come with me for your mortgage, 100% of my pre-approvals will close based on credit requirements. It's just my track record. I'm not a fan of people getting into underwriting only to find out that they don't qualify. We're going to figure that out all on the front side. But that being said, this is where you're ultimately going to get approved for the loan. The underwriters are also the most knowledgeable when it comes to the guidelines, right? That's their job. They are making sure that your loan and that your financial profile meets the requirements set by various agencies. And this one in particular would be HUD and the FHA. So that being said, say you have a conditional approval. At this point, we're gathering some conditions from the borrower. Maybe you needed a letter of explanation, maybe you needed an updated bank statement, send that all in. At this point, we're typically once we're in with 10 days from closing, we're going to resubmit for the clear to close. Boom, you're clear to close. Next thing you know is your closing date, and get your check and you're ready to go.
Yeah, there you go. I mean, it's the way Tony does it. It makes it easy. Like I was like, man, the FHA loan, everybody should get an FHA loan and just get a house. Just get a house and then think about investing in real estate. Because that was our thing, is thinking too much and shopping too much and thinking about real estate. And we heard this podcast and we're like, they said, just get into real estate and then think about real estate. Once you get into it, then you can think about it. So Tony kind of led the way, with getting the process started and kind of like front ended a lot of the requirements. So we were ready to go.
Absolutely.
Doing everything. Now talk about this owner occupancy rule. I think it's a 12-month rule that you have you can shed a little light on that. If you
Yep. So, kind of touch on what you just mentioned. When we spoke last year, you're going back and forth. Do you want to, just be straight real estate investor, or, what other alternatives are? And this is something that I think, I have friends calling me wanting to get into real estate, clients, customers, you name it. And I think this is the biggest kind of mistake people make, is they just go straight into being a landlord, right? Well, at the end of the day, your primary residence loans, whether it's a conventional loan or a VA or an FHA loan, they're going to give you the best terms and the smallest down payments, right? So it's the path of least resistance into becoming a homeowner. And not only that, but maybe it's becoming a real estate investor as well. And so this owner occupancy, there are 3 designations. One is a primary residence. This is the house you live in, right? You come home every day after work. This is your house. The second would be a secondary or vacation home. Generally, these have to be in vacation property in nature. So for example, maybe a house on a lake, or just a house that is, or any property that is, not within 100 miles of your primary home, right? It's something that is not the house you're coming home to every day, but maybe you go vacation there. And then the third is an investment property. The investment property is pretty self-explanatory. You're going to be a landlord, right? You're not going to live in the property, but you're buying it. And this is actually very important not to cut any corners on this. It's literally mortgage fraud. It can be investigated by the FBI. You do not want to go down this road. I guarantee you won't look good in an orange jumpsuit, put it that way. And that, a lot of people don't know that. They just think it's, it's slap on the wrist. But you can literally go to jail for this. So it's important not to mess around with this. But that being said, as a primary home where you're going to be getting the best loan terms possible, you do need to move in within 60 days, right? You're buying as a primary home. Why would you not move in within 2 months? Second, you need to be there for at least a year. Now, things pop up, right? Let's say you close on a property. 2 months later, your job says, hey, we need to transfer you across the country. Well, okay, going into it, you really didn't expect that. And this is a documentable change of circumstance. You can, maybe be a little bit more flexible about that. But that being said, that rarely happens, let's face it. You do need to be in the property for a year. And again, this is not really something you want to cut corners on. Now, that being said, the reason why it is not only important to abide by that, obviously we know there's legal implications to not, but why I think this is the most powerful tool people can use to start investing in real estate, especially younger people, right? You've got nothing but time in the future. This is going to get you into properties with the smallest amounts down, right? If you're anything like anyone else, it's not that easy to save up 20%. If you want to buy a $300,000 property, 20% of that is 60 grand, not to mention closing costs and everything. And then if you got to do some work too, that's a lot of money that most people don't just have laying around. Exactly. But that being said, you can get into that 300 grand property, maybe with a conventional 5% down or 3.5%. That's, those be 15 grand, a lot more manageable. And then you can hold on to it long term if that's what you're desiring to do. And at the end of the day, your interest rates are going to be lower as well. Really, this is going to be what gets you the best financing terms, and for the least amount of money, you can start investing in real estate. And it's not a scam, right? You see these commercials online, or you see these commercials on TV, like start flipping houses without your money. Come on,
that's
really is it that easy? If it was that easy, everyone would be doing it, right? But really, this is the reason why not everyone does it this way, because it requires patience, right? We're in a immediate gratification world. This requires patience. You can only do one every year. And so, and you have to move into the property, right?
Exactly.
Moving sucks, let's face it. But at the same time, if you're dedicated to really building that real estate portfolio, I can't explain enough how much I recommend doing it this way. It really, for the least amount of money, the best financing terms, you can become a real estate investor this way. And I know, Ellis, this is kind of the path we went down. I'm proud of you for doing that and starting there. And
definitely. I'm proud of you for coming into my life. And I'm telling you guys, don't cut corners with the 12 months, because
100%.
What it is, once you live in the house that you invest in, the house will start speaking to you. And I say that, and you'll kind of look at the house, go through the inspection and everything like that, and the inspector will say everything's great, everything's fine. But then once you live in the house will start speaking to you, and you're able to repair things and fix things up immediately. Versus having tenants in there, and then something, a water leak happens. We had a freaking leak in our in one of the units, and the tenant was like, "It's a leak in the roof." So we were able to come down immediately and address it right then and there. So it did less damage to the actual property. If you got somebody who stops up the toilet and the toilet's overflowing, they don't know to freaking turn the freaking water off right next to the toilet. They're gonna leave it running. Then you got your whole floor just like soaked in water, So actually living in your property is definitely advantageous. I wouldn't cut any corners. So that's
100%.
And a year is fast. It's pretty
exactly.
fast.
I mean, COVID was 2 years ago. You know what I mean? And look at us now. So
it's crazy.
But you hit the nail on the head with that. When you do live in the property, you learn the property. So just from a business perspective, it's smart because you learn the house, right? For example, if you've never lived in a house and that toilet starts overflowing and your tenant calls you, "Hey, the toilet's overflowing." Well, crap, where's the water valve? I don't know how to turn off the water. I've never lived there. You live in the property. You're like, oh, it's going to, go into the basement in the back right corner. It's the third valve from the top. Turn it all the way. You're good. And especially, being on site, you learn how to be a landlord, right? It's a learning process. It's not as passive as people make it out to be, right? Because at the end of the day, when you have a problem, who are they calling? They're calling you. And so being on site allows you to learn how to do that and how to get things ready. And, it really just teaches you how to scale your real estate business.
Gotcha. Well, definitely, you've been great. Did you want to touch on the employer distance requirement? I know that's something that shocked me too. They kind of want your property within a certain radius of where you work or something.
Right.
If you can touch on that briefly, and then we can wrap up here.
Yep. So, as we were mentioning, it's very important to not skimp on these requirements. And because of how valuable the owner-occupied financing is and how preferable the terms are, people commonly try to get around it. And one way they do it is maybe they try to buy a property that they don't live close to for work, right? Well, it's not as simple as just, I'll move into it, right? You have to be within a reasonable distance of the property you're buying and your work, right? They generally base it off of about 50 miles. Now, it's not always as straightforward as 50 miles. There's a lot of subjectivity to it, right? If you can, justify it because, it's just all expressway, it's a 45-minute drive or a 50-minute drive, or my wife's or my ex-wife's, and her kids live in the area. And so I, want to be there. So they do have ways to be flexible about it. But in general, you don't want to skimp around it by, saying you're going to live somewhere, even though it's not within a reasonable distance from work. So that's important to keep in mind as you're, beginning your real estate investments. Just be reasonable, about that distance requirement as well.
Yeah, just be real. Be real. Tony's gonna take care of you guys, and this is the realest loan officer I've met so far. And
Appreciate
he's
it, man.
definitely a part of my circle. And the thing, I think the value add for Tony as well. He knows a lot, but he also has a lot of people in his corner, right? So we didn't have to go too far and search for an inspector. We didn't have to go too far and search for a real estate agent and stuff like that. Tony kind of has, people he prefers, but he doesn't require you to use them. But he kind of has the whole system mapped out for you, so you're taken care of. So Tony, you want to kind of let them know how can they reach you?
Yep. So you can give me a call. My number is 630-991-1715. I will answer that phone all days of the week, virtually anytime if I'm not sleeping. And even if you wake me up, I might answer. And I might sound a little groggy, but I'll still answer that. I'm
Yeah.
pretty spot on about just being available and getting back to people. My email is tpredey@ammortgagegroup.com. It's in the bio. I'm not even try spelling it out. Follow me on Instagram. Buy with Tall Guy is my handle. 6'5". I picked that one up. Shout out to my cousin for coming up with it. But Buy with Tall Guy. Add me on Facebook. Whatever you got to do. I'm all about connecting with people, getting to know them on a personal level, because at the end of the day, that's really what it takes to make sure you give people the service they deserve.
Exactly. Well, thank you again for blessing us with your knowledge. We are definitely going to keep you, around. And if you guys want to reach out to Tony, you guys see the information. His information will be in the description below. Definitely, Tony is a limitless badass. He's definitely,
Right,
a part of this circle. So we definitely would cherish his relationship.
And I got to give a little plug to you, Ellis, as well. This man right here, very hardworking, man. I've seen it. I've witnessed it. Dude's a hustler. Let's face it.
Yep.
All your business planning, tax services, give him a call, man. He'll take care of you, really. And I've seen it firsthand. I talk to people all the time. I got a good gut for who's real and who's not. Yep. I'm telling you, Ellis is the man when it comes to that. He really will take care of you. And trust me, he's a hustler. It's harder to find someone's gonna hustle.
Ain't no way, ain't no way to go, but to go forward. You got to give it all every day, and just realizing what this life is. You got to go for it and create that life for yourself, and not sit there and dream and sit there and wait too much. You got to go out there and do. You got to go out there and execute.
100%.
But yeah, thank you, Tony, for coming on our channel. You definitely will be in the mix soon. You guys have all this information. I'm gonna go ahead and get on off of here, but go ahead and leave a Limitless 2022 in the comments below, and you might get a gift. We have a bunch of gifts here, and given without expectation this week. So I am out. I will see you guys tomorrow. Peace.
See you. Thanks for having me on.
All right.